us today. And Rob is the president of Axiom Research and Trading and has been the largest E-mini S&P trader in the world at various times and has won the prestigious Robbins World Cup E-mini Trading Championship. He has been a trading system developer for nearly 3 decades and is a proven researcher, educator, and mentor, helping others to achieve their trading objectives. In today's topic, he's going to be sharing what he calls as a super system for trading in volatile market conditions like the ones we have right now. He's going to tell us about the 4 primary factors that make up market movement, while leveraging these factors improves the probability for success, and how adding a 5th factor creates a super trading system. So with that, I'd like to welcome Rob to the room. Rob, how are you doing today?
Hey, Raleigh.
Hi, Rob.
Hey, thanks for having me in.
Trading in volatile market conditions, put crystal clear.
There you go. Perfect. And then if you guys would like, maybe turn on the, we could put on the webcam if you want. So
yeah, it's your choice, my friend, whatever you're most comfortable.
Okay, it's saying you cannot start because it's been stopped, but let me, yeah, either way, it's fine. So.
Okay, let's see here. Ask to start video. Here, how about that? Try that now, Rob. See if that does.
Yeah, that looks good. Hey, guys.
There we go. Hey.
Hey, everybody.
All right, buddy, it's all yours.
Okay, thanks very much. Thank you. I'd like to thank everybody for coming in today. I have prepared a really nice presentation for you. And we're going to cover a lot of ground, and not dissimilar to what you've just seen, but it's got a few things in there and some statistics and things added to it. And I think you're really going to enjoy it. This is really what's enabled me to have a career as a trader spanning over 30 years and to be successful and to live the life as a trader. So I'm going to share those things with you, and I think you'll really enjoy it, and the way that we've come to do this. So today's presentation, Trading in Volatile Market Conditions, Secrets of Super Systems. First off, past performance is not necessarily indicative of future results. There is a risk of loss trading futures. Don't use the grocery money to trade. Yeah, don't use the grocery money to trade. So I'm going to cover some topics today, and the list that I have here for that is Secrets of Bayes' Theorem. This is going to make it really interesting because I'm going to wrap this whole thing in a package that you can just use rule of thumb on your fingers basically and count these things up and find some really good trading opportunities with high probabilities associated with them. Trading system concepts that work and that have worked for me over the decades. So we're going to look at, Raleigh said there were 4 things, and there's actually more than that or less than that, but we're going to package it together in the simplest way. Secrets of price action and trend, secrets of momentum, and secrets of order flow. Those 3 main components, price action, momentum, and order flow, that come together and make high probability systems, and I'll show you the kinds of probabilities associated with those kinds of things as we go here, and a lot more. Yeah, so these techniques you're about to learn will work in any reasonably volatile market. Raleigh had already introduced me there. It's just a few things about me sharing with you here, and then okay, so secrets of super systems, probability stacking with Bayes. Today's webinar is covering concepts in price action, order flow, and momentum to build super systems with probability stacking. So to build super systems, the main key is to have components to your trading method or system that have independent components that statistically add together. So you take each thing on its own, and then we establish a statistic associated with that. I don't really like using that word statistics so much, and as we go here, you'll see how I just lay this out in rules of thumb, but it becomes, the way we approach it is very scientific and has known outcomes associated with it. So we'll be doing this with price action, order flow, and momentum, and we're going to structurally build that together, and we'll treat each independently. You know? The charts that we're going to be using to do this will also have 3 panels in them, one for price action, one for order flow, and the third one for momentum. And we'll do this using a method called Bayes' theorem. We're going to cover a lot of ground, and we're going to do it pretty quickly because we just have an hour here. So get your notepad ready and hold on to your hats. We're going to have a good time. Secrets of super systems components, right? So price action, order flow, and momentum, as I said previously. I'm going to show you patterns in each of these that independently are 70 to 75% or more to predict continuation of price expansion or movement with the trend in the market. Bayes' theorem was created by a Methodist minister by the name of Reverend Thomas Bayes. And I have the formula there, but you don't really need to know that. I just put it in there for convenience and for those who are inclined. Don't really need to know that. It's a simple math formula. It enables us to determine the likely outcome of several known probabilities that are occurring in the same time or close together in time or space or price. Yeah. And at the end of the webinar, I'm going to give you a link to a spreadsheet that I use to develop this. So when we get several things lining up, we get what I call probability stacking. Now, I have a background in experimental design and statistics. So naturally, when I got out of college and I found an interest in trading, I started applying these kinds of things to the way I was programming trading systems. Now, it's kind of funny because back in those days, you didn't have software for doing these kinds of things. And so I kind of built it from the ground up. I didn't realize I was doing something that was going to become a big industry or anything like that. But I've been doing this for a long time. And these concepts are just super rock solid because I don't like losing. I really don't. So I don't want to lose sleep over that. You can reduce Bayes' theorem to simple rule of thumb that makes it super easy. Like I said, you don't need the formula or anything like that. The spreadsheet is interesting that I'm going to give you later. It's going to be interesting for you to explore to get an intuitive sense of the way it works. So we're using 3 components: price action, order flow, and momentum. And of these 3, we simply consider any or each of them to be about 75%. So we're not going to look at anything today that's less than 75% to contribute to the success of the trade. So some of them are higher. So they're going to combine that with Bayes in the following way. And this is just a screenshot right here, straight out of the spreadsheet I'm going to give you in a little while. So if you have 2 75% probabilities that are lining up in time or space, like we said, you've got a 90% probability to continue in the direction on that trade. If you add yet another one, the third panel in the charts that we're going to be taking a look at, you go to 96. If you get yet another one, you go to 99. If you get yet another one, you go to 100%. Yeah. So now we're going to cover the components in a little bit more detail, knowing that. So like I said, you can just count these things up on your finger. You're sitting there trading and you're like, okay, I got 2, I got 3, I got 4, nothing's against. It's a good trade. So if you can just, if you can just do that, you know, you can do what I'm about to show you once you learn to recognize the pattern. So the first one is price action. So if you use a structured bar type, such as the Smart Renko that's going to be on these charts that I use from my sister company, Indicator Smart, it's possible to establish price continuation probabilities based on price action. Some of these guys are as high as 88% just on their own to continue. You know, so you call that a trend continuation pattern or something like that, right? So for example, if you're touching a prior area of price action, what's the probability it'll continue in the original direction? If you have a certain pattern in price action or geometry, it'll look like a pattern on the chart, you know, a lot of times triangular kind of patterns or things like that. What's the probability that that will continue in the original direction? Now for today's webinar, if you have a trend, what's the probability the trend will continue? And so I'm going to take all this and I'm just going to make it super simple for the purpose of the webinar. The next component in the chart is going to be order flow. And I've built a career over this as well. Order flow tends to lead price. In other words, as the orders will come in and they'll start pushing the price in a certain direction. And sometimes you'll get those little fake outs and they become traps. That's why the tool that we're going to look at is called Trapped Trader Oscillator. And what it does is it shows you what pure price action traders cannot see just by looking at a chart. It's a view inside. Yeah. And so I like to only put things on my charts that show me things that you can't see just by looking at the chart. Yeah. So I've got approximately 11 or 12 of these patterns that I've identified over the years. Then we use and consider them to be generically 75% to continue. Some of them are more, some of them are less. Some are upwards of 84% probability consistently over long periods of testing and actually live trading. Yeah. So we're going to cover several of those today, but we won't have time to cover all those patterns. That would be too much. So we're going to just cover a handful of those as we look at the charts and get you started in seeing how this kind of trading works. The next panel on the chart, component number 3, is momentum. And then the rule for momentum is momentum tends to lead price. And it shows you again what pure action traders, price action traders, cannot see by looking at a chart. It's also a view inside. Yeah. So as often seen in various types of divergences, the pattern that I'm going to show you today is called a T2 with trend divergence. I've been doing this for forever, this particular pattern, and this is really the core of what's made it possible for me to live a life as a trader, this particular pattern. So just like order flow tends to lead price movement, a T2 divergence pattern that we're going to cover in a minute predicts range expansion. And so the phrase here, before we had order flow leads price. Order flow leads price. On momentum, cycle expansion begets range expansion. So if you look at a market and it's choppy, in other words, you're getting tight alternations in a tight time, when the cycles within that start to expand and get bigger, that's actually predictive of price or range expansion. And that's really what we trade for. We trade for range expansion in the range of the price. Yeah. And so, like I said, I've been able to build my career over this key concept, and I'm going to share that with you in just a minute. So component number 4, a trend can add up to 20% probability or more to your favor on a trade. 20% or more. So that's 20% above random. Yeah. So that's about 70%. Yeah. Trend can be purely structurally determined with price structure. Like I said, it could be like geometry, or we could use a smart price band, or could be like a moving average or something like that. Yeah. And depending on how that's designed, it'll work better than others. Yeah. So in different time intervals or time frames or dimension. Yeah. So we're going to use trend. And so for the webinar today, we're going to use the smart price bands, and we're just going to use the color of that. And then price action, the price bars, the structured price bars that we discussed. And then we're going to use order flow with the Trapped Trader Oscillator, also known as TTO. And then we're going to use the smart momentum. We're going to do that one first because the whole thing kind of rests on that foundation of cycle expansion begets range expansion. And then we're going to build a super system on the charts in just a few minutes. Yeah. And today we're going to use the smart price band as a proxy for some of those more subtle patterns that happen on a structured bar chart, just to make it all super, super simple for everybody. Okay. So the T2 divergence. A T2 divergence is generically 80% to continue. 80% to continue. So smart price band add up to 20% over random, or 70%. So if we look at our bays, we know that 2 75s is 90. And so you can just, take two fingers and okay, I've got that. Do I have anything against that might be working against it? No, I don't. Okay. So we're batting about 90%, 92% in a little screenshot of the spreadsheet that I'm going to give you in a little bit. Okay. So by adding the smart price band with some simple filtering, you can achieve win percentages upwards of 90%. Using the 70% input for the smart price band, 80% for the momentum pattern that we're about to do, your Bayes input on your spreadsheet will get you about 92%, to continue in the direction of the original trend. And this is particularly true in cases where the range is not already overexpanded, where it's not overdone. So if a normal example of that would be if a normal range day is $1, for example, and you've already gone $1.50, you might want to be a little bit more cautious under those circumstances. The stats still hold, though, because the stats are based on all market conditions. Now I'm going to use a program that we developed called Trade Markers, and it's going to help us to compile the statistics and things like that. It's a very powerful tool that we use for getting some specific numbers that we can associate for our input to Bayes theorem. And that's key to this whole concept, is that we have known probabilities that we're working with. We input them to the spreadsheet, or just using the finger rules, and we have known outcomes before we fire the trade. In the following charts, I'm going to teach you the T2 pattern. We'll enter, so these are the rules, We'll enter the T2 patterns with the color of the smart price band. Just simple. If it's cyan, we're looking to go up. If it's red, we're looking to go down. As a proxy for price action, just to make this super simple, like we said, if we meet the minimum excursion of one smart Renko bar, we'll set a break-even stop. So we're going to make the money management just super tight, super tight. If the price action re-signals, we'll re-enter. And we enter on any reversal bar, which is a change in color of the bar. So if the bar goes, if the smart price band is cyan, and we have our T2 pattern that we're going to look at, and the bar color turns green, then we're going to be looking to buy. And if it's going the other way, we're going to look to go short. This makes price action, trend, and momentum for each entry. 3 components. What's 3 components on Bayes? It's like up above 95% or so. Okay, so this is the T2 pattern. Okay. So this is the smart momentum down in this panel right here. Now, these are the only 2 things I have on the chart, just a price action and the momentum. Just a price action and the momentum. The smart price band is cyan, and so we're looking for the market to go up. Now here's the thing. When the smart momentum breaks that line right there, I've drawn that as a horizontal, so it's kind of like a triangle kind of thing. But when I made this super simple by showing these points on the smart momentum. When the smart momentum breaks that line right there, then I know I have a T2 condition. So as long as that's cyan and that broke a line, I'm looking for the next green bar. Super, super simple. Okay, market's coming down here and comes back up, and I broke the line right there. This is going up. And the smart price band turns cyan. It's actually red on that bar right there, and we're looking for a sell. Market comes down, and we set a break-even stop, and we get out on that. The market re-continues its original trend. This breaks the line right there, this cyan, and we buy the green bar, and up it goes. Same thing happens again here. This smart price band is cyan, and we break the line again. And boom, 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 boom. And we'll just cover a bunch of these. This is one day. I just went through one day on whatever day it was that I built this webinar. Here we've got the market coming down. Smart price band turns red. So we've got some selling opportunities on this one now as it turns red. This guy's coming up. It broke the line right there. You have a higher red dot. And you get the red reversal bar right there, and boom, boom, boom. Comes back up, touches the smart price band, comes higher over that interval, boom, 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 boom. That comes back higher again. This is what I was talking about a minute ago. If you get a really long leg right here, compared to that leg right there, we call this as a CD is greater than AB. When you get that, there's a really high probability you're going to get some trapping. So if you're going to fire that, you did get the T2 right there, you broke the line right there. So you could sell that, but it's a higher risk than these other opportunities were. Yeah, and so it gets stopped out. Yeah. We call that CD is greater than AB. Sometimes it'll work, and sometimes it won't. Yeah. So market continues back lower again. It doesn't signal a T2 on this one. And then we get the double reversal right there that turns red on a red smart price band. We broke the line going up, and boom, 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 down it goes. Yeah. I think I have one or two more in this day. And so continuing, smart price band turn red. This one we call a slider, where you get a little change right there, and then it goes higher. Yeah. And so that one's a little bit more advanced, but I put it on there anyways just to show you. We call it a slider T2. And then the smart Renko turns red, and down it goes. Yeah. With this coming up right here, and get the bar right there, and it doesn't follow through, so we break even, stop. It does it yet again, and we break even. You know, so what's the market doing here? It's trapping out, trapping out. Yeah, and the trend recontinues again, comes back here, and you pick up the T2 again, and down it goes. Yeah, down it goes. Oh, I have one more. Okay, here you get the real long leg. You know, real long leg, you break the line, you know that's a relatively high risk trade as we discussed. And then this is a little bit safer entry on this one. And so up it goes. You know, smart price band is cyan. You break the line here and you fire right there. This leg was a little bit longer, so it's a little bit higher risk. And then you can re-enter on this one. Yeah, re-enter on this one. Market starts to come down over here, and that's what you got for the end of the trading day right there. Okay, so super simple. Cyan, green, line break, go. You know, cyan, green, line break, go. You get those. You actually have three things on this chart because we're allowing this smart price band to define patterns that we cover in more detail in our training. You know. So what do we have here when we add this up? If I use a 20-tick stop loss on this over the period of 5, I think it's 5 days. I'll show you that in a minute. This actually gets about a 95% win. I don't like using the 20-tick stops as much, so I showed you what it looks like when we use a 15-tick stop. And it's about 88%. You know, it's about 88% to win on this type of a trade. T2, smart price band, 88%. And I think this one here details the results for the 1, 2, 3, 4, 5. Yeah, 6 days. Yeah, 6 days. Yeah. You can see the win percentages. And like I said, this is a trade marker report, and this is what enables us to compile statistics that we've been doing over very long periods of time. We just know these patterns work really, really well over time, just time and time again. So you can see the win percentages on these. And so that's the T2 pattern. Yeah. Now we're going to take this to another level. We're going to add the order flow to it and see what'll happen with that. Okay, so by adding order flow, or what we call the trap trader oscillator. So let me tell you a little bit something about order flow. There have been all kinds of order flow tools developed over the years, and some of them are called ladders, and they have all kinds of numbers all over the screen. What I found when I first started experiencing those kind of things is I can't have 500 numbers on my screen and be in a state of interpreting that. It's too much. You really want to get this stuff down where you can just go boom, boom, boom. Yeah. And so I've also found as I've gotten older that I just don't have the energy to keep processing mentally with that kind of thing. So what I want to do is I want to turn the entire order flow picture into a simple geometry that I can see at a glance. Yeah, and so that's what the Trap Trader Oscillator is all about. We have tens of thousands of hours of development in these tools. Yeah, and so by adding the Trap Trader Oscillator to our Bayes equation, we should be able to improve theoretical improvement from approximately 92%, which was our baseline right there, to about 96 to 97%, you know, theoretically according to Bayes. And so we'll see if the Reverend is right. We'll see how well the Reverend does on that. Okay, so some of the trades we took previously that were marked on that chart. I'm going to use the exact same chart. We're going to add the Trap Trader Oscillator to it. We're going to go over the exact same chart and we're going to look at it. Okay, so some of those trades that were T2s are already going to have TTO patterns on them. We just didn't know that they were there. Yeah. So we're going to now we're going to add. Remember before I told you that shows you inside the market. It shows you what you can't see by looking at the chart. So when we add that on there, some of them are going to they're going to have a TTO pattern on them, which means they were more stacked than we knew they were. Yeah, more probability stacked than we knew they were. But we didn't know that. So in some cases, on the flip side, the TTO will keep us from trading where it does not get support. Yeah, this is going to keep us out of, potentially should be keeping us out of undesirable trading situations. And I would want those conditions to be true if the tool itself had validity. Okay, so this should theoretically improve the system performance and efficiency and the risk and all that stuff. Yeah, so the TTO patterns are pretty easy to learn because they're just simple shapes. And you don't have to have like thousands of numbers and all kinds of stuff. And so, like I said, there's about 11 or 12 of them, and we'll learn several of them today. So let's see what happens when we do that. We're going to go over the exact same chart. The first pattern I'm going to teach you here is called the 3-dot pattern. If you see 3 dots, okay, I see I drew the line there. If you see 3 dots, that's a continuation pattern. Now we're only doing T2s today, but if you were trading what I'm teaching here, you could consider that as a buy right there. Yeah, especially if this smart momentum is green and this is cyan, and you get the reversal bar and you've got the 3 higher dots. That tells you there's successive increasing order flow going into this market. Yeah. Okay, so we call that the 3-dot pattern. We've got another one of those over here. Okay, 3-dot pattern. When that right edge of that 3-dot pattern gets taken out and then it hooks back again, we call that the 3DV because it makes a V shape. If you're going long, it makes an inverted V. Makes an inverted V if you're going short. Yeah. So it's just 3 dots, breaks the line, and hooks. Yeah. So here we had a T2 that we covered before, and it was a 3DV. Yeah, 3DV. What happened here? Oh, I got 3 dots going against the trend right here. Yeah, the smart price band hadn't quite turned red yet. Sometimes it'll catch it and other times it doesn't. But you would know right there that you did not want to be buying right there. You did not want to be in the market right there because it's telling you you've got successive selling pressure going on in this market right here. You can't see that by looking at the chart. A lot of people would otherwise be lured into buying in here, but you know that you've got successive patterns of declining order flow, yeah, or selling pressure. So then what happens is the market V's here, it breaks the line and it hooks again, yeah, and then you got the T2 right there. So that tells you that the market's probably going down, which it does by just about 6 or 7 ticks or so. Yeah, 6 or 7 ticks. Then what happens? Well, we get this. This is actually a 3-dot pattern because we can dismiss these bars, but we didn't get the T2 there, so we're not going to look at that one. And then what do I get here again? 3 higher dots, 3 higher dots. Did we break the line? Yeah, it's a T2. These are the same trades that we had on there earlier. So that tells us that we're probability stacked. How are we probability stacked? Well, we're given 70% for this guy. It's actually higher. Yeah. We're given 75% for this guy. We're given 80% for this guy. When you put that into Bayes, you're going to get way up in the 90s someplace. Yeah. For continuation. And what does it do? It breaks and it V's again. And we have the T2 again here. Yeah. Right here, you'd had the lower dots from here, and then you hooked again there, and this is called a 3-dot V again. That's just continuing from the prior chart. Now, we've got another pattern that where it does it again. Yeah, it does it again. So you get 3 dots, you V and hook, and then you break it again and you hook. We call that the 3DV extended. Yeah, 3DVE. Yeah. And so you get a T2 there to sell, and then you get a T2 there to sell, both with order flow support. Yeah, order flow support. Not really getting any pattern here. Okay, not really getting any pattern here. Although you could consider that that was a pattern with this out of bounds, but with that long leg, like I said before, you expect some trapping there, and you didn't quite get a signal here. If that had broken that line right there, it would have told you that the order flow was strongly leading down, but it didn't get the signal. So with the TTO patterns, we can remove that trade right there. Yeah. Didn't really get a TTO pattern here. I'm going to take that one off. Yeah. And had successive T2 type patterns there. Yeah. So on this next chart, this one is the one I described earlier. It's out of bounds up in here, and you got, that was the one we called the slider. Yeah. And this trade, when these two combine, that's actually 84%, and it combines with the smart price band. So that would be 2 input to Bayes on that one. You'd have 84%. T2 TTO pump is 84% to go, and the smart price band is adding there to the tune of about 70%. Yeah. So you got 3 lower dots here, but you didn't pick up a T2 pattern, but you could consider selling on that. And you get 3 lower dots with the smart price band on this pattern here, and you can consider selling that. Yeah. Then you pick up another 3DV again. It's just 3 lower dots and break and hook. Yeah. And then 3DV again, 3 lower dots, break and hook, and then break and hook again. Yeah. This is another pattern that we do called the midline hook, MLH. MLH. Yeah. This is where the trap trader oscillator traps around the midline there, and you get the T2, and it continues. Yeah. And then continuing here, you had a 3-dot pattern here, and it trapped you out a bit. You did have a long leg there, so you did expect the trap, but I have it marked on there anyways. And then we get here. There was no TTO pattern on this one, that got taken out. And then this one right here is what we call a TTO lead out. This is where you get, hold on a second. This is where you get the trap trader oscillator is breaking that line higher. It's leading out, going up. This is a pretty high probability trade right there. Call it T2 with a TTO lead out. Yeah. And then we got this one over here. You've got 3 lower dots and 3DV right there, and that one ends up breaking even. Yeah. So let's take a look at what happens when we add the TTO. Yeah. There's a 98% on this scenario. I didn't put in here trade multiple lots. This is just one lot trading. If you added these lots here, it'd be way more. But the win percentage on this over the 5 days goes up to about 98%. So let's review what happened when we did this. Yeah, we took the 80 for the T2, and we took 75% for any one of the TTO patterns, because we just in general call those 75%. That one that was the TTO lead out, those are about 84%, but we'll just use 75 anyways, because it's just that way we can just use our fingers, right? And then on the trend, it's about 70%, and so it'd be about 96% or so, maybe plus or minus. So by adding the order flow to this chart and removing the trades that were not supported by the order flow, we increased our edge by 3%. What is an edge? An edge is a concept that I came up with for evaluating how effective your trading system is. These tables have a edge on them. So let me talk about edge real quick for a minute. So an edge is the amount by which your trading system is better than break even. Now, my dad owned a furniture store growing up, and I've owned any number of businesses in my lifetime. So this is an interesting thing about this business, okay? My dad had all this, there's like trucks, and there's secretaries, and there's accountants, and there's lawyers, and there's delivery people, and there's warehouses, and there's a retail front, and the personal guarantees on the lease, and all this kind of stuff. And it's just like this amazing amount of resources going into this this business, So, my dad's business did over $1 million, decades and decades ago, over $1 million. And he said, one time he told me, he goes, by the time it's all said and done, I'm lucky if I get 1 to 2%. 1 to 2%. What is that? So, this is probably because my dad, would say these things to him. My dad didn't say much, but he, when he did, you really wanted to listen because it carried the weight. What my dad was describing is the edge. Yeah. What he was describing is the edge. I've got all this money going out. There's $1 million coming in, and by the time I pay everything out, I'm lucky if I get 1 or 2%. Well, these kinds of scenarios that we're looking at are giving an edge. What was that first one that we looked at? 28% edge. Yeah, 28% edge. So, if you compare this kind of thing to the average business out there, the edge is utterly gargantuan compared to what you'd get owning, or carrying leases and trucks and employees and all kinds of crazy expenses. And then when the economy comes crashing down, of course, you don't take the heat as much, which is kind of cool, So we increased our edge by 3%. We increased our expectancy over 20%. We reduced our trade hold times. I didn't look at that, but we reduced our trade hold times by a good margin. In other words, there was increased entry efficiency on the trades. And we increased our win percent by 10%. And we did all that with probability stacking and approximately meeting Bayes' theorem within 1 or 2 percentage points and Bayes' theorem prediction. Systems designed in this way, I can't stress enough, because I've been developing trading systems for 30 years, and I'll tell you, you do it in a regular way that the software is designed to do, and what happens is you find out as soon as you start trading the darn thing, it doesn't work. So I've spent a good part of my career learning how do you design a trading system that will work going into the future, because none of them did, in the early years, right? They just fail as soon as you start doing it. So systems designed in the way that I'm showing you are highly, highly robust, and they have a very low probability for failure. Why? Because everything's got to fail for it to fail. So if I've got some trades, you'll count up like 5 things. You're like, I got 5 things on here. What's the percentage of that? Well, it's 100% compressed, right? 100% compressed. So you know, if you have 100% and there's something else going against you, even after you knock that stuff out, you're probably still batting up above 90. Yeah. So, but like some trades on any given day, you'll go, whoa, there's like 5 things going on here. 5 things. And those are trades that you just have to take. We've got some higher time frame charts and things like that that have all kinds of probabilities, upwards of 90% on those alone. And sometimes you'll get probability stacking with those. In other words, you'll get on the charts that we've been looking at, you'll get something else that's stacked on another chart that's 90% on its own. And so you start getting these just insane, and that's why I call them super systems. Yeah, super systems. So there are many high probability patterns that we haven't marked, and I showed you a couple of them where you'd get like that 3-dot pattern with smart price band. But there's many of them that we didn't mark. We just did the T2s today. Yeah, just did the T2s. We haven't marked the other ones on the chart or took those into consideration, just using the T2. Yeah, we just did the T2, and then we added the TTO, and because that's what we have time for, and it's super easy to learn and to wrap your brain around. Yeah, super simple. So we teach these and the other patterns in our trading room. Yeah. Structuring for high win percentage. Okay, is it possible? It's also possible to take signals off other charts. Actually, I just mentioned that, right? That align with these signals and other methods and probabilities. Yeah. So all trades working with the charts structurally built. Yeah, boom, 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 and evolved using price action. Structure generically about 70 to 75%. Order flow. Actually, like I said, some of those price action patterns are up 88%, but we didn't have time to cover those kinds of details today. Okay, so order flow patterns are generically 75+% on the Trap Trader Oscillator. Some of them as high as 84. The basic T2 that we just covered is generically 80%. And then you can also factor in support and resistance or targeting or range that I alluded to earlier. Some of these guys are way up in the 90s. In other words, there are certain numbers that every single day we're going to hit them 95, 96% or more. Yeah. Using a tool that we have called the Smart Support Resistance Tool and other methods. Yeah. But that's another subject unto itself. But Raleigh said I'd have a bunch of things, and I told you there'd be more. So there's more. Yeah. What's nice about using these stats is you don't actually have to do any math. You have the formula there and all that stuff. You don't need a spreadsheet. You don't need to be over computing and getting all, they call it analysis paralysis. Yeah. Analysis paralysis. You got so much effort going into being logical that you can't function physically. Yeah. Because we do have to have a match between what we're doing rationally and with our physical bodies so that we can function in the real world. Ask any athlete or go watch, whatever you might enjoy, where there are people that are really skilled. They've transcended the rationality so that they can function in a natural manner. And so a lot of this stuff is really designed and intended to help you to get to a place where you can transition into trading effectively, because when you're trading, it's stressful. I once had a teacher, and he told me, he goes, your performance is always going to drop down from whatever you can do in a not live thing. So like if you're a musician or something, you can play it really well when you're sitting in your living room all alone. But then when you walk out onto a stage with 65,000 people on it, that's a whole different ballgame. So you need to go through that's why it's good for a musician to start out in the small venues before they get to the big ones. You just walk out in front of 65,000 people and they're all cheering and stomping their feet. That can be pretty intimidating. It's hard to play your guitar or your cello. Well, you can't even hear it. And then worse yet, the sound's bouncing off the back wall, and you know, it can get really confusing. So what's nice about using these stats is you don't have to do the math. You just know you can count them on your fingers. It's very structural, intuitive, simple, and super robust. Super robust. We started this webinar discussing concepts behind how you structurally build a trading system, and then we broadened it to specific applications. We just built it one step: smart price band, smart momentum, trader oscillator, from the original system design concepts that we discussed. We've just structurally built a trading system. Yeah, there's all different ways actually that you could put these various tools together into various things. Yeah, into various trading methodologies. All indicators are from our sister site, indicatorsmart.com. Yeah. So you want to make sure what's important with these kinds of things is that you build your systems from proven concepts like the ones that we've covered here. Yeah. And some of the ones that we haven't. And if you can establish those probabilities preferably through observation, not through backtesting, if you can establish those probabilities and then you test them. So in other words, you observe it first, and then you go in and you test it, and you go, yeah, I knew there was something going on there, and that's where you go. You're actually, in that matter, you're going from intuitive to rational. Yeah, and that's what we used the trade markers for, that we use to mark those charts there. Yeah. If you'd like to learn some of the patterns we did in this webinar and a whole heck of a lot more, and their application in the manner that we've been doing here, structural, intuitive, statistical, in a way that's simple to do. I teach exactly this in the oil trading room every day, where I lecture for approximately 2 hours on these exact topics and other applications in trading, trading psychology, money management, and other topics of interest to traders. Yeah. These applications that I teach can be used in any reasonably volatile market. Yeah, and I'm going to give you a resources page at the end of the webinar here. Yeah, yeah. Let's see what else we got. So the system, the collection of tools that we built this out of, is called the Smart Patterns Trading System. Yeah, it's a structural and modular intraday trading system. Actually, it's not limited to intraday, but that's mostly what we use it for. That catches moves in both directions: up, down, trend, counter trend, and scalping. Yeah. And it benefits from probability stacking due to its structural, modular, stat-based design. Yeah. It uses patterns, price action, momentum, order flow, and support and resistance to find low-risk entries with a high probability for follow-through, often exceeding 85+%. So this is another thing right here. It's flexible, so it can be organized to fit your personal trading style. I found that over the years, I've trained thousands of traders, and I found that not all of them can have the same, they're not all wired the same. Some people are more risk aversive, and some don't have any problem with more risk or less risk or whatever. And so it's super important that the method that you take to do something and the system within which you're doing it is flexible enough that you can find your place within it. Yeah, that you can find your place within it. And so it's super important that you can take any of these structural components and build something that works for you, and something that's intuitive to you, something that's makes sense to you. Yeah. And as mentioned, tens of thousands of hours of member use and refinement. One of the things, we've been doing the trading room for 6 years now, and it's just been amazing, the contribution of members and how that has led to just increasing refinement in the level of knowledge that we have. Yeah, it's been an amazing journey. And what's cool is that you don't have to come in and learn it from the beginning, because when we first started in the beginning, we didn't know that much. Now we know too much. Yeah, but we have a good time. It's fun. Yeah. So that leads me to the oil trading room, is trader training ground. Yeah, for learning advanced trading techniques, super crazy advanced to just as simple as it gets. Yeah. And so we've discussed some methods today, and we go to a whole nother level. Do you need to go to a whole nother level in order to be successful? Absolutely not. Yeah, absolutely not. You can just keep it as simple. In fact, over the years, the very best trading systems ever are super simple. But what do we do today? We built a trading system out of a smart price band, a momentum, and a trap trader oscillator. Yeah, it was an over 90% win. Yeah, and so it's pretty amazing when you know where to focus that effort to get those kind of results. Yeah. So if you want to learn and benefit from these tools and much more than you might enjoy, join us in the trading room. Yeah. Futures auto trading, I'll just kind of throw this in there. Futures auto trading, if you don't have time to trade, because of we've got trading rooms and I've trained a lot of traders, and so this is a new website, and we have a lot of traders coming on board with it, and that are using these kinds of methods and beyond. And so if you don't have time to learn this kind of thing, and you want to have a trader who's successful lead your trades, then go over to Futures Auto Trading and just sign up for the free thing there, so you'll be notified of new traders that we have coming on board and things like that. Yeah, like I said, it's a new website. If you are a trader and you have a trading program that you want to leverage into an income, as opposed to just trading for your own account, then we're looking for traders. Yeah, and so go over there and you would sign up as a leader. Yeah, as a leader. So futuresautotrading.com, and just do the free sign up for now, and then you'll be notified as we go forward. So I'd like to thank you guys for coming in today and taking the time to learn a little bit about what I do and what's made it possible for me to have a career as a trader over all these years. Let me check and see any questions that we might have.
Sure, and I can, hey, Rob, thank you very much. There are several that came in here. I can feed them to you if you'd like that. I think one of the questions that came up, it came up actually several times, and I think you just answered it, was whether it's possible to automate your system.
It is actually kind of a backbone of some of this stuff is a product from Shark Indicators. We're partners with Shark, and I think you know those guys, Raleigh.
Yes.
And that product enables us to automate these things or semi-automate them in a way that's very simple. And the beauty of that backbone to the smart pattern system is that it just puts stripes on the chart. For the purpose of this webinar, I didn't put them on there, but normally, or if you go look at other webinars and things, you would see background color stripes that would show you where these signals are.
Okay.
And so yeah, you can automate this kind of stuff. Now, that being said, the reason I don't just give you an automated system is because I have to protect my users, right? Because if we just, because I've seen this over and over again, you buy a new trading book, and I've done this 100 times. You buy a new trading book, and I'll code up everything in it, right? Code up everything in it. A really good example of that is James Altucher, Trade Like a Hedge Fund, 21 strategies for, used by hedge funds or whatever. The day that book came out, everything in it worked great. From that day forward, from that day forward, almost none of it did. Okay, this is just a classic example. So you have to be careful with this stuff not to let the cat out of the box. And so I don't want to just give away a piece of code, because the question is, how many lots can be traded at any one of these prices? And the answer is, not that much. So, by having everybody do it themselves, all firing at little different prices and little different times and everything else, and it doesn't mess it up. It's super important though. It's a great question.
And well, and kind of another question that came up from several people was also, we know that your focus here is with crude, but I think you made a statement that you felt it could also work maybe in other markets. So my question is 2-point. Does it work in other markets, or has it really been optimized for crude because of the nature of how crude moves, how it works?
Well, so good question. We also have the stock index trading room, where we use this on the E-minis. You know, the Russell trades almost exactly like crude because it's a 10-tick structured market.
Yes. Yeah.
But it's a thin market. The thing really moves, you know, and so yeah, any reasonably volatile market, it'll work in. Now, some of the things that I actually didn't share in the webinar today, because we do things like we call it market mapping, where we actually map out what the market's going to do today. And I don't think we have time for me to cover that, but the market plays out certain scripts that it does every day, and some of the probabilities for those things can be staggeringly high. It's really crazy. So I'm an expert on that in crude oil. I'm not as great of an expert in it because I've been doing the trading room, and I have this a group of traders that are super experienced and giving feedback and the evolution of it all. But we also do that in the E-mini S&Ps, stockindextradingroom.com, and so yeah, any of those markets, we've got traders, gold, currencies, any of the commodities. We got guys doing stocks. We've got guys in foreign markets. We got guys trading the Hang Seng. We got guys trading the FDAX. The FDAX is a wild ride.
Sure, it is.
Yeah, works great in the FDAX. If you know, although the E-mini S&P is like crazy right now. I think the average daily range is 61 handles,
which was crazy, and it was down in 20s before.
Yeah. So right. So yeah, historically, when I go back to when you mentioned in the beginning, oh yeah, Rob used to be the biggest E-mini trader in the world. Well, back in those days, if you had a 20 handle range day, that was like, whoo, that was like, 24. That was like, now we blow through that in the first half hour of the day.
I know, it's amazing.
So it's the ES right now is it's a wild one. It's a wild one. And
all
so,
right.
but yeah, sometimes too volatile.
Well, Rob, it's been terrific, buddy. I wish we had some more time, but we're right up against the top of the hour.
Yeah,
I want to thank you so much for the presentation and the time that you spent with us here today, and really do appreciate that. And we're going to go ahead and grab the screen here, and I'm going to remind everybody of the special offer that you put out there for us. So once again,
cool. Thanks for having me.
Thank you so much for coming, buddy.
For letting me share.
All right, let me grab the screen here. So yeah, terrific representation there, presentation from Rob. Once again, just another individual who's got, really has dedicated a large portion of his life towards really getting into the nuts and bolts, of the market, from his perspective. Obviously, he's strong in math and engineering and looking at the details behind that, and I just think a fantastic view of the market, and just a great representation of the kind of diversity of opinions and approach and expertise that we bring. And that really is going to it's just been a remarkable session from that perspective. I think everybody's collective contribution has been super. So once again, check out what Rob is all about on transforming your trading program. Go to westsmarttrading.com/RM, and that will take you to the link where you can learn more and see more about what Rob and his team has going on. And